right, so let's take a deep dive into some pretty interesting activity we saw with spot Bitcoin ETFs in the U.S. recently.
Okay.
Ready to unpack this?
Absolutely. Yeah, there's some pretty intriguing data here that, might point to some shifting tides in the crypto world.
Exactly. We're focusing on February 6th, 2025, a day where Bitcoin ETFs saw a pretty significant shift.
Okay.
For those of you following along on our CoinTalk Podcast YouTube channel, we've got some visuals to help break this down.
Right.
For 2 days prior, these ETFs had, enjoyed inflows. But on the 6th,
Yeah.
we actually saw outflows totaling a whopping $140.3 million.
Yeah, it's particularly interesting because this happened while Bitcoin itself was struggling to hold that $100,000 mark.
Right. Makes you wonder what those investors are thinking.
Right.
And if we look closer, Fidelity's FBTC led the pack with a massive $103.25 million heading out the door,
Wow.
with Grayscale's GBTC trailing behind at $42.21 million in redemptions.
Now, contrast that with Bitwise's BITB. It was
Yeah.
the only ETF in this group to actually see inflows pulling in $5.15 million.
Interesting.
This is where things get really interesting. Could this be tied to Bitwise's targeted approach? They focus on a specific niche within the Bitcoin market.
Right.
Maybe that's attracting a different kind of investor.
Maybe their marketing is just really on point,
Yeah,
and they've managed to snag a new wave of buyers.
could be.
We should explore that for a future CoinTalk Podcast deep dive.
Yeah.
But there's one more player in this game that's worth noting.
Okay.
BlackRock's IBIT. They saw no net flows whatsoever. It's almost like they're sitting on the sidelines,
Right.
watching how this all plays out.
It's fascinating, isn't it? You've got some folks pulling back, others jumping in.
Yeah.
And then you have those like BlackRock just holding steady. It almost mirrors the overall sentiment in the market.
Absolutely. And to make things even more interesting, the total trading volume for Bitcoin ETFs that day actually surged.
Oh, wow.
It climbed to $2.45 billion, up from $2.04 billion just the day before.
Yeah.
So we have increased trading volume with outflows.
Yeah.
What does that tell you?
To me, it screams uncertainty. It looks like investors are definitely repositioning themselves, maybe reacting to some broader economic signals. Remember, this was all happening against the backdrop of some, significant economic news.
You're right. I almost forgot about that. Fill everyone in on what happened on February 5th that might have spooked the markets.
Well, on the 5th, both Bitcoin and altcoins felt the pressure after the U.S. ADP report showed stronger than expected job growth. And keep in mind, this came right before the official non-farm payrolls report, where economists were actually anticipating a slowdown.
So we have these competing forces, a surprisingly strong labor market,
Yeah,
but predictions of a slowdown. How does this tie into the crypto world?
right.
For those of you new to the CoinTalk podcast, this connection might not be obvious. Help us understand.
It all boils down to the Federal Reserve and what they decide to do with interest rates.
Okay.
A robust labor market might push the Fed to keep rates high to combat inflation. This could delay the rate cuts that many were hoping for.
Hold on, let me make sure I'm following you. If the Fed keeps interest rates up, does that make Bitcoin less appealing?
Exactly. Higher interest rates make traditional investments like bonds more attractive because they become less risky compared to assets like Bitcoin.
Got it.
So yeah, higher rates could be putting a damper on Bitcoin's appeal. This could very well explain the outflows from Bitcoin ETFs investors moving towards safer havens amidst all this economic uncertainty.
That makes a lot of sense. But here's where things take a turn.
Okay.
While Bitcoin ETFs were experiencing these outflows, Ether ETFs were actually on a hot streak.
Oh.
They saw their 7th straight day of inflows on February 6th. We're talking $10.65 million flowing in. And get this, all of it went into BlackRock's Ether ETF.
Yeah.
The other Ether ETFs didn't see any net change.
Interesting.
It's almost like investors are saying, we're not sure about Bitcoin right now, but we like what we're seeing with Ethereum. What do you make of this?
It certainly paints an interesting picture. Remember that massive influx of interest in spot Ether ETFs we saw the week before? Over $500 million poured in between January 30th and February 5th.
Wow.
That represents a full 16% of total inflows since those ETFs launched.
Really?
It seems like investors are becoming increasingly confident in Ethereum's long-term potential, especially compared to Bitcoin right now.
Wow, 16%. That is a serious chunk of change. If you're watching this on our CoinTalk Podcast YouTube channel, take a look at this chart. It really shows you the magnitude of that shift. But what's driving this sudden surge?
Yeah,
Is it just because Ethereum switched to a proof-of-stake model,
right.
making it more energy efficient? We've talked about that on the show before.
Yeah.
But surely there's more to it than that.
Ethereum's move to proof of stake is definitely a factor.
Yeah.
It positions it as a more sustainable alternative to Bitcoin's energy-intensive proof of work system,
Right.
which appeals to environmentally conscious investors.
Sure.
But that news isn't exactly new. I
Yeah.
think this surge is driven by something bigger. Remember, Ethereum is more than just a cryptocurrency.
Okay.
It's a platform. Think about the explosion of decentralized finance, DeFi, and non-fungible tokens.
NFTs.
NFTs, yeah.
Those are both built on Ethereum.
You're right. Ethereum's got its fingers in a lot of pies these days. And that growth in DeFi and NFTs is probably attracting a whole new breed of investor, one that's looking beyond just the price of Ether itself.
Exactly. They're looking at the potential of the underlying technology
Yeah.
and the applications being built on it. It's almost like comparing investing in a gold mine versus investing in the company that makes the tools for gold mining.
Okay, I like that analogy.
Yeah.
So we have these two seemingly opposite trends happening, outflows from Bitcoin ETFs and continued inflows for Ether ETFs. What's the takeaway here? What does this tell us about the bigger picture?
It tells me that the crypto market is maturing.
Yeah.
Investors are no longer treating all cryptocurrencies as one big lump sum. They're starting to differentiate between assets, carefully weighing potential risks and rewards against the backdrop of a changing economic landscape. And right now, it seems like they're finding promising opportunities in Ethereum. It's fascinating to see how these trends are playing out in the world of ETFs. Speaking of which, ETFs are becoming a much more accessible way for people to get involved in crypto.
Absolutely. ETFs provide a familiar structure for traditional investors who might not be comfortable directly holding cryptocurrencies.
Right.
It allows them to participate in the market without having to deal with the complexities of wallets and private keys.
That makes a lot of sense, especially with more institutional players entering the space. I bet we'll see even more innovation and development in the ETF market going forward.
I agree, but before we get ahead of ourselves, let's bring things back to February 6th.
Okay.
Remember, these ETF flows don't always perfectly reflect what's happening with the underlying assets.
Gotcha.
So let's take a quick look at how Bitcoin and Ether themselves were performing that day.
Great point. Give us the numbers.
At the time of reporting, Bitcoin was trading at $97,341, down 0.5% for the day. Ethereum, on the other hand, was trading at $2,711, down 4.1%.
Hold up. That's interesting. Ethereum took a bigger hit despite the positive ETF news. But
It's important to remember that the crypto market is incredibly volatile and influenced by a multitude of factors. It's never just one thing.
right.
Sometimes the broader market sentiment towards risk assets can overshadow individual narratives. Even though Ethereum might have a brighter long-term outlook,
Yeah.
it's still vulnerable to those short-term swings.
So even with all that positive ETF activity,
Yeah.
Ethereum couldn't escape the market jitters.
Exactly. And let's not forget that Ethereum, for all its progress, is still a relatively young and evolving ecosystem. There's always the potential for unforeseen challenges or technical hiccups. Remember that whole merge situation a while back?
Oh, yeah.
That was a huge step forward, but there were definitely some bumps along the way.
Right, and those sorts of events can spook investors, leading to volatility, even when the overall trajectory is positive.
Yeah.
And of course, we can't forget about the ever-present issue of regulation.
Mhm.
We've covered this extensively on the CoinTalk podcast.
Yeah.
Unclear regulations create uncertainty, which makes investors nervous.
Absolutely. The lack of clear regulatory frameworks, particularly in the US, can put a damper on the entire crypto space, affecting both Bitcoin and Ethereum.
So even though Ethereum seems to have a lot going for it right now, there are still factors that could hold it back.
That's the nature of the beast, isn't it? The crypto market is full of potential, but also full of risk, and that's what makes it so captivating.
It certainly keeps us on our toes. If you're enjoying this deep dive, make sure to subscribe to the CoinTalk Podcast YouTube channel for more insightful analysis and discussions on all things crypto. We're here to help you navigate this ever-changing world.
And don't forget to hit that like button and leave a comment below. Tell us what you think is driving these trends. We'd love to hear your thoughts. And if you know someone who might find this discussion helpful, share the video with them. The more, the merrier.
Okay, so we've covered a lot of ground here on the CoinTalk Podcast today. We've seen Bitcoin ETFs dealing with those outflows, possibly due to broader economic concerns, while Ether ETFs are riding a wave of popularity likely fueled by, excitement around Ethereum's potential. It's almost like we're witnessing a changing of the guard in the crypto world.
That's a very interesting way to put it. Yeah, it does seem like investor sentiment is shifting.
Right. And it all begs the question, is this the start of a bigger trend, Are we going to see Ethereum really start to outshine Bitcoin?
That's the million-dollar question, isn't it? And if I had a crystal ball, I'd be on a beach somewhere, not here talking to you.
Right.
But in all seriousness, it's impossible to predict the future of the crypto market with certainty.
Yeah.
What we can do is look at the available data, analyze the trends, and try to make informed decisions.
And that's exactly what we're trying to do here on the CoinTalk podcast. Equip you with the knowledge and insights you need to navigate this exciting and often unpredictable world. So for those of you following along on our YouTube channel, here's a recap of the key takeaways from today's deep dive.
Okay.
First, we saw those outflows from Bitcoin ETFs, possibly driven by anxieties about the economy and the Fed's interest rate decisions.
Why?
Second, we saw continued inflows for Ether ETFs, suggesting growing confidence in Ethereum's potential, fueled by things like its move to proof of stake, the growth of DeFi and NFTs, and its overall position as a leading platform for innovation in the blockchain space.
It's also important to remember that while ETF flows can give us valuable clues about investor sentiment, they don't always perfectly reflect the price movements of the underlying assets. We saw that Ethereum actually experienced a larger price dip than Bitcoin on February 6th, despite the positive ETF news.
Right, and that just highlights the volatility inherent in the crypto market. It's a roller coaster ride for sure.
It is indeed, and that's why it's crucial to approach crypto investing with caution. Do your own research and never invest more than you can afford to lose.
Couldn't have said it better myself, but for those of you who are ready to embrace the excitement and potential of crypto ETFs, can be a great way to dip your toes in the water.
Yeah, they provide a familiar structure for traditional investors, allowing you to gain exposure to crypto without the complexities of managing your own digital wallets and private keys.
So there you have it, a whirlwind tour of Bitcoin and Ether ETFs, market trends, and the forces that are shaping the future of crypto. If you're craving more deep dives like this, make sure to hit that subscribe button on our CoinTalk Podcast YouTube channel.
And don't forget to smash that like button, leave a comment below telling us what you think about these trends, and share this video with your friends. We love hearing from you and building this community of crypto enthusiasts.
That's all for today's episode. Thanks for joining us on the CoinTalk Podcast, and we'll see you next time for another deep dive into the fascinating world of crypto.